What's up traders, Tom here with another video. Today we'll be talking about the S&P 500, copper, gold, and sterling from a technical analysis standpoint. Stay tuned. Ahead of market open, no real notables, pretty low volume across the board in the futures. We have some increases in oil and a little bit of an increase in the VIX coming into the weekend. Yesterday, the Fed stress test found that the US banks were healthy enough to withstand the current crises, and they expect pretty much that the nation's biggest banks are healthy, but could suffer 2008 style losses if the economy languishes and doesn't improve. Nothing really too important here. We knew that the banks were going to be better prepared than they were in 2008. And obviously with the Fed's backing and help, it does make sense this would be happening. Just a quick reminder, if you haven't subscribed already, why not think about subscribing and hitting that bell? And if you enjoy this video, give it a big thumbs up as it really does support the channel. Pretty interesting loss from Nike here with $790 million loss. After, of course, this crisis shuttered stores. We are seeing this across a few earnings reports at the moment, but Nike is down around 4% coming into the market open. So I thought it was worth noting that we have some sports bet odds here on the two main US presidential election candidates, Joe Biden and Donald Trump. At this stage, it looks like Biden is really coming in on the odds. So in terms of the polls, which have not always been correct, he is leading by a decent margin right now. If this continues, Wall Street will really be reassessing this. And if you're somebody that wants to look ahead and this was to occur, you may want to look for stocks that are going to perform well under Democratic rule. We don't know yet. It'll be a story that unfolds over the next coming months. I want to quickly bring up, before we get into the technical analysis, something that I think is really important, and that is that copper is going to become pretty good investment over the coming years. There's all sorts of reasons why copper is going to do well. It's generally linked to economic health, and there's no doubt that demand for copper will fall this year. In fact, they're recommending or saying that it would fall around 5% in 2020 due to the current crisis. But that consumption would rebound. And there's all sorts of things like green investments and other stuff that will cause copper to go up over time. In fact, one of the big ones is electric vehicle industry currently makes up about 1% of copper demand. But as more cars get produced in electric vehicle forms, by 2020, many analysts are expecting that figure to reach around 10%. On to the US market, we pretty much remain in the middle of nowhere zone. We've seen support come off that 200 simple moving average. We've obviously got this key zone here sitting between 3,000 and 2,950, where previous resistance is becoming support. And we know the 3,000 is a psychological key zone. If the market was to get under this zone, we would expect it to clear to 2,800. We've covered this many times on the channel. And for the bull side, I would think that if from a trading perspective, you would want to see the market above this 3160, and then you would be trading it long into the 3200. Obviously a break of this zone, so something like this would happen. A break of this zone, something like this again would occur, and then it would go into the previous highs. We're stuck in the middle because there's so much uncertainty. There's two sides of every argument all the time. We're obviously looking for the Fed. A few things just to quickly cover from yesterday's video. We all do know the Federal Reserve is the most important lead stat in terms of what they're going to do. If they come out and they protect the market at this zone, then obviously we would see strong bulling pressure, and that would mean that you should probably get into equities. If we see it break these key levels off news from the Fed, you may want to also consider finding stocks that you think are going to perform well over the long term. But at this stage for traders, it's tough to trade in here. We're basically stuck in a zone between these levels, these key levels of 3,000 and pretty much this 3,160. Until we break those zones either way, we can't do too much unless you want to scalp and day trade in between. So the reason I wanted to bring up copper before was because of this chart and just because of the way copper reacts to improvement in the economy. So here we have what happened during 2008, and it was pretty clearly down heavily while the economy was languishing and we were going into a recession. But coming out of a recession, demand usually spikes heavily in copper, and this is similar to other key metals. If this was to occur again and we go quickly into recovery, remember we have problems with unemployment and several other key factors. Copper spikes of governments as well, getting in and coming up with new schemes and plans to help boost jobs and boost the economy. So copper is worthwhile checking out if you believe we're in a recovery right now. And if copper does decline again, it could be something that you want to get some kind of, exposure to over the near to short term. Is copper a good long-term hold? Not generally, but copper is one of those things where if you hold it at the correct time for a period of time, maybe 1 to 2 years, or you hold companies that hold copper for that period of time, you can do quite well. So it's a thought process that could go into your investment strategies. What about oil? Well, oil is obviously sitting at a major divergence point. You have really serious divergence through the MACD indicator. Many people ask me which type of MACD indicator we're using here. It is the MT4 MACD in TradingView. But the more important thing is that we're potentially going to see a change of trend on the 4-hour, fairly significant time frame. So what we wanted to see here is we would want to see from the peak to the trough. So again, peak to trough, and then we would have a lower peak and a lower trough would pretty much then cause the market to be in a sell-off. We do have here a 200 moving average. So what I would like as further confirmation is basically breaking this key zone here around $34.50, $35. If that happens, I would say there would be significant selling pressure coming in for oil, and it would be worthwhile looking at something like the daily time frame to confirm this. The reason we want to look at the daily is it's one of the most important charts of all, and we can see that the 20 exponential moving average has been holding oil up for now. If that level at 34.50 was to break, we would expect the market to continue down and then pressure to be buying it at around this $29, where previous resistance will act as support. So pretty important on US oil. Brent is very similar. We're looking for change of trends from the price action standpoint. Remember, at this stage, the trend is still up. But like anything we say on this channel, the risk reward for oil is becoming minimal because there is incredibly strong resistance on US oil here at around 43.50, where previous support will act as resistance. Remember, any traders out there that are looking for technical analysis indicators, you must check out multiple timeframes and always do multiple timeframe analysis. It's not good enough to just look at a 1 hour or 4 hour chart. You need to look at the timeframes around there and set up your key support and resistance zones. See, as we scroll out here, it'll become even more apparent why that $43 is so key, with multiple supports now acting as resistance if price was to get up there. It's always key to check those timeframes. So generally with the stock market right now, if the US dollar is going up, it is a good indicator that we are seeing weakness in the S&P 500 and other indices. The other day we were talking about this 97.50 zone and we barely got a close above, and in fact couldn't even get past the wicks. Now, when it comes to investment in any of these types of pairs, it always pays to look at the conservative entries when you're doing technical analysis. Breakouts are fine, but the one problem with breakouts is that you often get fake outs. So one of the ways to stop that is to wait for a clean break and pick up the role reversal where the market breaks through, comes down, and finds support at the previous point of resistance. At this point, you can then drill into the smaller time frames, look for change of trends on the smaller times, look for engulfing candles, look for hammer candles, look for other technical indicators, and then you can look to buy it up. And this will avoid you taking losses or potentially getting into trades that will lose you money. So we have a bit of strength coming back into the US dollar. Major support here at 96.50 has acted as support. Markets have picked it up. We have a 20.50 cross on the 4 hour. And again, we get past this key level up here, we're going to see potential break, then a potential pullback. And at that pullback, we could be looking for longs. At the same time as this happens, you would usually expect the indices to be going down. So there's no confirmation here yet, but it's something we could be looking at. So I said at the start of the video, I wanted to cover sterling, as in I wanted to cover pound US dollar. The reason I want to cover this is it's got a very interesting kind of pattern that's occurred on it. So one thing is that the previous move has become the secondary move. And then if you expect that move to happen again, it would basically be calling for around this 122. Now, I usually find that on this third move down in terms of the legs, it's usually shorter. So you'd be targeting somewhere around this previous resistance acting as support, as we know it happened a few times here on the left. The other key thing though about sterling is the pullbacks that have happened. So notice how these pullbacks are exactly the same in size. So that means the market is acting quite technically, and we're seeing now a breakthrough. In the private Discord and during our Wednesday webinar, I talked about this, and I talked about looking for a change of trend on the 1 hour, and we saw that the other day. So very, very key level, and we're seeing a break now to the low where sterling is acting quite weak. So you could already be in this type of trade short. It's one of those ones where I like trading different instruments because different instruments are acting more technically than, of course, things like the stock market right now, where it is all driven by the Fed and monetary policy. So gold has well and truly broken through this previous high here that we saw at 1750, and it's finding further strength. But of course, with ever weakness, we'd be looking at this 1750 if you've missed out in the initial breakout. This is a good kind of reload zone, and what you want to do is you want to wait for it to come down to a zone like this, and then what you do is you get onto a smaller time frame and you look for changes of trend. So let's say theoretically it was to come down to this level again and you were looking at picking it up. A bit of a novice trader would just go, okay, buy. And that's fine, and it will work multiple times, and you are still using a good area at a good key role reversal. However, the better way to do it is to look for a change of trend. So to look for something like this, where you have a trough, you have a peak, and you have a higher trough. When you wait for this change of trend, you make sure that the market considers that level again and that it finds it to be an area of value. And then the big market makers and all of the momentum begins back into your area. This gives you that slingshot kind of effect off the correct area, and actually it is the better strategy than looking for breakouts. We hope you found this video educational today, and if you did, remember to subscribe and hit that bell, and of course have a great weekend, and we'll see what the markets bring us next week and tonight. Bye everybody. Have a good weekend.